On this episode, what does the bank actually mean when they give you pre-approval? And even Warren Buffett says, take advantage of these interest rates. And he's an old rich white guy, so they know everything. This real estate stuff is not easy, so send me your questions and I will answer them. This is the Ask Jason Show. Hello everybody, my name is Jason Piercey and this is episode 103 of the Ask Jason Show. 103 episodes of this nonsense. Cool. So today I want to talk about something that is sort of on the heels of the last one that you watched about how buying a more expensive house can actually cost you less money monthly. I want to talk about what it means when you go to your bank or to your mortgage broker or whoever and they give you a pre-approval amount. Let's say they give you $300,000. What does that mean? Does that mean that the bank is willing to lend you $300,000? Or does it mean that your purchase price as a maximum is $300,000? Because those are different because we live in Canada and depending on your mortgage product, you need to put a minimum down payment down, typically around 5%, but some people will put down more than 5%. And then you also have CMHC or Genworth mortgage insurance, default insurance premiums. Is that included in the $300,000 number that they give you? So what does that actually mean? Because it can make a big difference. So if your bank tells you 300 grand and that's what they're willing to lend you, then you still need another $15,000-ish because you need 5% down. So 5% of 300 is, 15,000. So it changes your buying power a lot. And in addition to that, if you go to the bank and they say, well, we're going to give you 300, that's your purchase price. Purchase price, that's based off of what percent down? Is it based off of 5? Is it based off of 10, 15, 20? Like where does that come from? Typically the default would be if they give you a pre-approval amount for $300,000. They're basing that off of current interest rates and the posted rate because you have to qualify to go through a stress test. Do we have to talk about the stress test now? Probably, hey? Yeah, okay, I'll get to that in a second. That $300,000 purchase price is probably based off of 5% down, which means they're not lending you 300 grand. They're lending you the difference between your down payment and your insurance premiums and the purchase price of $300,000. So let's take the insurance stuff out of it just for a little bit because it complicates things. If the bank tells you that you can buy something for $300,000, they're lending you $285,000. The 5% down, which is $15,000, you have to come up with yourself. It's really important to know that. I was just in a situation in a conversation with some people just last night, actually, about wanting to build a new home. And I was trying to explain to them, this is how this connects to the last episode. I was trying to explain to them that spending this other $6,500 to $11,000 based on which things we wanted to implement was going to return so much over time because it was going to bring their heat bills down, cut them like in half. And over the lifetime of the house, that's a really good idea to spend 6, 8, 10. Thanks, Dre. Oh, goodness. I'm so sorry. Now is a really good time to let people know that I'm allergic to dogs. And if you watch it at a fog, you will know that I have been tested. I had the thing inserted into my brain and I am healthy. Well, I don't have COVID-19. I shouldn't say that I am healthy because all of the medication I take for my multiple mental illness diagnoses would suggest I'm a little bit less than healthy, but I feel good. So anyway, the conversation that I was having with these clients for a new build was that their bank told them that they could spend $400,000. I asked them if that was a purchase price, if it was amount that was being lent to them. They asked the question to their mortgage person. They said that is a purchase price. So then I said, is it based off of 5% down or is it based off of another number? Because they had a little bit more cash and they had intended to put more money down. They went back and they said that's based off of 5% down. I said, amazing. So the reason that's amazing is because what they wanted to do with the energy efficiency that would pay off over time would have put them outside of their approval amount. So that would cost them another 10 grand on top of what they could afford to spend according to the bank. Had the bank quoted them that as what they could lend, no big deal. Because down payment on top of that, it gets them on top. If they had give them that $400,000 amount based off of the 15% that they were putting down, now we were in a tough spot because there wasn't any more money to use. But luckily, most people will quote you based on 5% down, which means the extra cash that they had, they could invest into the energy efficiency of the house and everybody would be happy. So the moral of the story here is that when you get a pre-approval, you need to know if it is a purchase price, if it is what they're willing to lend you, and you need to know what percent down that purchase price amount is based off of. So if you get a pre-approval for 350 grand, is that what 5% down or more or less? Is it what they're going to lend you? Really, really important stuff, because we could be talking of differences in tens of thousands of dollars. So you need to know that so that you can have a really good grasp on what your buying power actually is. That's what I wanted to say in this episode. What was the thing I asked you if we were going to have to explain? Stress test. Okay, so right now mortgage rates are ridiculously low. So Andrew Harper at Premier Mortgage, he's a guy that I do personal business with, and I refer a lot of clients to. There are others that I trust also, but Harper is the one that shows up at the end of all of these episodes. Here's a couple I would trust to work with my mom. And if you're good enough for mom, good enough for you. Because that's true. Like Greg at Haven Homes. I would let Greg build a house from my mom. And if I'll trust him to build one from my mom, then you assholes I don't know, obviously you can trust him. Anyway, right now Harper can get you 1.69%. That is so low. It's historically low. It's effectively free money, right? But that's what your payment will be based off of. But you have to qualify for your purchase price when he does like your debt service ratios, like how much you can afford to spend monthly to be approved. That's based off of a higher posted rate, and they call that a stress test, which means it's the stress of your family's household stability. If you can spend $300,000 at a rate of 3.5%, if you can afford that, and we lend it to you at 1.69, if rates fluctuate and go up, the bank isn't worried about you losing your house because you qualified at a higher rate anyway. So that's what a stress test is for. It protects you, it protects the bank, it protects everybody, but it also gets on a lot of people's nerves because in the case of the clients I spoke to last night, they can well afford the extra $10,000 for the energy efficiency shit because it is totally worth it, but the bank wouldn't give it to them because they had to qualify at the posted rate. Anyway, that's what a stress test is. Oh, I have something else that I want to say. There's a few topics in here, but this is important. If you have the ability right now to put, say, 10% down on your house as opposed to 5%, and you're talking about a $300,000 house, that means that you have $30,000 cash that you're willing to put down into your house. The government only forces you to put 5% down. And now there will be a change in the default insurance premium that you have to pay if you're putting down 10% versus 5%, but it's not that much. And interest rates right now are so low. If somebody would come to me right now and say, I will lend you $15,000 at 1.69% and you have 25 years to pay it off. Like, why would anybody not do that? It's effectively free money. And the point of that is I could do so much with that $15,000 that would return higher than 1.6% interest. I would lend it straight out to Joe at 5% and he'd take it. I just made 2.31% on the 15 grand. Now is not the time to put down extra big down payments. Even Warren Buffett came out the other day and posted an article saying now is the time to refinance your house because the money is so cheap. So I'm not a big fan of big down payments right now. Unless it's like really large purchase prices. Because I mean, if you're anything over $500,000, you got to put 10% down on anyway. And anything over $750,000, you got to put 15 down. And over $1 million, you got to put 20% down. So that's that anyway. That's the law. But if you got 30 grand that you've been saving to buy a house, and you can borrow that money, like it's the difference between borrowing $270,000 at 1.69 or $285,000 at 1.69. There's a fluffy here. And that other $15,000, keep that in cash. Buy Tesla stock. Because Elon Musk is going to take, he's a legit super villain now. He's going to like colonize Mars and like just anything. Put it in S&P. You should have had Verifin stock. You don't. I think everybody understands what I'm trying to say. Do you think?
And yeah, I really do think.
I think I got it out. Okay, so in summation, what is your pre-approval amount based on as a down payment? And is it a loan amount or is it a purchase price amount? And take advantage of low interest rates, and stress tests suck but are also awesome. That is everything for this episode of the Ask Jason Show. 1, 2, 3, and that's it. See you next time. Peace! The Ask Jason Show exists so that you can get good real estate related information from a resource that you can trust. Now, speaking of resources you can trust, here's a couple I would trust to work with my mom. Because good enough for mom, I mean, good enough for you. That in the wrong way. Turn it off.